Hello, everyone, and welcome aboard. It's Hump Day, but more importantly, it's that once every 6 week day, which is known as FOMC Day or Federal Open Market Committee. Short, the Fed, they're going to strut their stuff today, and that's a little bit later on. Well, it's a lot later on. It's more tomorrow for most of us than today, and I think it's around about 4 or 5 in the morning, my time. I might get up for it. We'll have a little bit of a judgment on that a little bit later in the day, because we do have the potential to trade this as a breakout. And so far, the euro is playing ball. It is within the range that I spoke of on Monday and yesterday. So maybe, just maybe, we'll set that. In fact, at this stage, we will set that breakout trade in this session. So hang around for that if you haven't seen it before. It's pretty cool, and every now and then we actually get a very nice result out of that. And I'll be looking for that. I'll looking to place that just before we close today's session. Okay, it's not the only news about, of course, the Fed news. We've got CPI figures coming out on pound and CAD. Poor old pound. It just cannot catch a beat. Although one would have to say that it hasn't crashed as dramatically as we might have thought after Draghi spoke yesterday. Certainly sent the euro in a bit of a flurry. That's for sure, but only just shy of the monthly pivot. It did hold up above the monthly pivot, so that's something to behold. And as I said, good for our potential breakout trade. So the CPI is not particularly tipped not to be a great news for the pound. We'll see how that pans out. The CAD similarly not supposed to be a good number. And we've got Draghi speaking again. What can he do today? Can he actually move this market more than he did yesterday? Well, he's likely to come out and arrest that crash that he caused yesterday. But, who knows? I mean, that's pure speculation. Crude oil inventories tipped to be down. Perhaps we are seeing a bit of a move on oil as Iran situation doesn't look to be getting any better. And, of course, as I said, the news of the day, which for most of us will be overnight, the FOMC statement and economic projections funds rate, and of course thereafter the FOMC press conference. And the Kiwi, again overnight for most of us or early in the morning for some of us, will be GDP figures for the Kiwi. That is all happening in the next 18 hours or some 12 hours, a bit more than 12 hours really. So let's see what there is to trade. I suppose I'll go through what I'm looking at, and Asher, of course, will be with us very, very shortly as well. The euro, there is the euro, and I'll just preempt this particular scenario by going to the 4-hour chart. And what I'll be seeking to do is take the range of Monday, Tuesday, Wednesday into consideration. So at this stage, really the range is the effective range is there. You could probably stretch that out to there if you wanted to the highs, or you could be even a little bit more conservative and stretch it out above the weekly pivot. That's probably the way I will attack this. And same on the south side. There's the effective range. There's the safe way to play it, or the safer way to play it, and that's probably what I will seek to do. But as I said, I will set that up. If price is down here, forget it, or if price is up here, forget it. Not going to happen. We have to be contained within this range before I will consider taking that on. Now, Mr. Draghi did me no favours yesterday. I was waiting for price to get up to the weekly pivot and then looking for the shorts. That wasn't allowed to happen, and as you can see, that one real movement of the day caused the euro to fall. It wasn't dramatic, I suppose, in the real sense. It just looks a little bit dramatic in the sense that it's the biggest candle on the chart I suppose 50 odd pips in a short period is a bit of a crash. But I'm not going to call it a crash. I'm going to call it a reaction. There, it looks far more dramatic on the 30-minute chart, doesn't it? Since then, what have we seen? We've seen a double bottom on the monthly pivot, and potentially now we've got that. Well, we have got a higher low. There's no question that we've got a higher low. Not a tradable higher low for mine. Not really flash, but it's definitely there. And we're thinking daily pivot test. I would think we probably are. And are we thinking trend line? I think we're probably entitled to be thinking that as well. But at this point in time, I don't see a way for me to trade that. What I would like to see, if I am to trade the euro long, and mind you, that's a bit of a stretch right now, given what Draghi had to say yesterday, he wasn't very buoyant at all, and was very much not even hinting. He was saying that we are probably going to cut interest rates again and reintroduce QE, quantitative easing. So that's why we saw the euro crash fairly quickly. But since then, as you can see, not a damn thing, and we're really locked in consolidation here. Although, as I say, we have put in a double bottom and a higher low, so we'll keep our eye on that. And as I say, it's currently in the range that I'd like to see it come FOMC time. Whether that changes or not is an entirely different kettle of fish.
I'm with you, mate. What we got here?
Mate, I'm just having a look at the euro and seeing what Draghi did yesterday,
Yeah.
and what we can probably look forward to in terms of what he's going to say today. Goodness knows. I'm hoping you're going to tell me that you got your long on, and
I did.
you might even be in profit by now.
No, do you know what? I did have it on. I came out a shade early, so I did take profit on it. So it was a net profit trade out of the hedge.
Cool.
But I've come out of it, and I regret it. Actually, I wish I'd stayed with it, because actually it's holding its nerve here. But what I don't really want to have to add at this point. Unfortunately, the futures charts are looking a bit skewy now. I'll quickly show you. I woke up this morning, and after coming in, hold on. I thought something crazy had happened. I've got this huge gap down here.
Oh wow.
And I thought, oh, this is great, you know. So I came out of my trade. So it was quite early, but I did make a profit on it, and then it was really when it was starting to approach this resistance line, but it took that one out as well, and kept going.
Yeah,
and then I
it
woke up
had
this morning
fire in
and
its belly, didn't it?
oh, it really did, yeah, it really did, and it was interesting, really, because Draghi did come out obviously and state that there would be some room for stimulus, but he didn't say there was going to be stimulus, which is one of the reasons that I came out. I just thought, well, there's it's really interesting, isn't it, that there is a way that you can read the market, but actually, when it comes down to it, the powers that be, but being ahead of the fundamentals is really understanding what the reaction is after them, rather than understanding the fundamentals themselves. And because when I heard the speech, I just heard him saying, I could do this, I could do that, and that there is room for this and there's room for that. But he didn't say he was going to actually do anything, and it just seemed to me like, let's calm things down a little bit more than anything else. And as I say, I woke up this morning and I saw this gap, and I thought, geez, there must have been some problems in Iran, or maybe the problems in Turkey are taking effect, or maybe people are now just not interested in this because of the Fed. But then I remembered that there was a futures expiry, and that is why we've got this gap.
Okay.
So the gap doesn't really exist, if you see what I mean. It's when we look at the cash market, is, I'm not sure if it's even open yet, but that's where the cash market is.
Actually, I'm
So
glad you told me that about Draghi, because I only read the headlines. I didn't listen to the speech or anything.
Yeah.
And the headline I read was, and I could see it pretty much in the chart on the euro, that euro definitely cutting interest rates, and QE is really going to happen. So that's what I heard. You heard something different, obviously. So that's good.
Yeah, I mean, I heard the speech, and he didn't really say that. He just said that there were tools that they could still that they still had in their arsenal to get
Yep.
inflation back to near 2%.
As
And
every governor's saying at the moment, exactly the same thing.
yeah, effectively, and they will do whatever it takes. I mean, it was one of those. It's kind of, I suppose he did say it without really saying it, and that's why maybe it's being read in the way that it's being read. And the other thing that happened was that Donald Trump then came out and said that that the Chinese trade deal was back on, and or not, the trade deal was back on. Sorry, that Xi Jinping had agreed to meet him. So
Lovely
that
man. Is he a lovely man this week?
he's a great man. He's a
Oh,
great
great.
man,
Great man.
great man, great leader, and a real friend. So so given that, it kind of then starts me wondering, well, why would the Fed then loosen? Why would they bother lowering interest rates when there's a potential trade deal on the table, when the US economy is doing okay? And nobody else has shifted. So I just don't know whether that helped. I don't think Donald Trump. I think Donald Trump probably came out and tweeted that to see if he could give the market another boost potentially, because he's starting his presidential campaign. And he wants to make sure that he goes down as the key player in the U.S. economy, and effectively finish his tenure as somebody that has boosted stocks. But
And put a
but
lot of pressure, and I believe this is escalated this week as well. Put a lot more pressure on Jerome Powell again.
absolutely, yeah,
He's giving
yeah,
him a lot to think
absolutely,
about.
yeah. So saying that he's asking if he can sack him
Yeah,
effectively.
yeah.
But
Bit of a message,
I
isn't it?
don't. Yeah, I just don't know. With Donald Trump, you sometimes wonder whether he says these things because it's very poignant timing, isn't it? Him saying that. And I wonder whether he says these things to just try everything in his arsenal to get his own way. He's
Absolutely, no
tried
question
to be
about it.
nice, and now he's kind of going the other way, and now he's going to try the nasty route. Obviously, they've basically come out and said that that's just not possible for that to happen. That's not going to happen. But if he's trying to kind of force Jerome Powell into a position where he may well be panicking and just thinking, well, my job is under pressure here, then he's going the right way about it, and maybe Jerome Powell
Or does he shove
is.
his finger up, give him the finger, give him the bird the other way, and say, "Go and get knotted, you idiot."
Yeah, well, this is the thing, he's kind of he may well lose his job by the end of Donald Trump's tenure, or it might actually help him out, and maybe it becomes a bit of a judgment call for Jerome Powell if he can stay within the job until Donald Trump is either. Well, the presidential campaign really kind of like kicks in. If he could make a judgment call and think, well, I think he's going to go out, so because of that, I am going to leave things as they are and do my own thing, because the next person that comes in will respect that. Because if he starts to buckle here, it's not going to improve his stock. So
No, not at all.
I don't know. It's interesting, isn't it? The nuances and the kind of side theatre that goes on with this sort of thing. But that's
Well,
really what it
it's
is,
just another Trump thing, isn't it? Really, at
and
the
it's
end of
another Trump
the day,
thing. Yeah,
it's unprecedented. The president doesn't put pressure on an independent, body like.
yeah.
Well, I suppose that they may have inferred in the past, but nothing to this degree. And it's just another Trumpism, yeah.
Yeah, absolutely right. And also, if they were doing it, I don't know if they do it publicly, like in the same way that Trump has done.
Indeed, certainly not in Twitter.
No, but it's making this market kind of tricky to read because of the gap here. everything is not actually genuine. Does the market try and close this gap? Because if it does, then that's actually going to take it way beyond. And I'm going to have to be a little bit careful of that. Again, bringing back to the cash, that's going to take cash way up, and probably up to the next potential level. Could be the next, could be the all-out high of the. Is that the high of the year? Yeah, it could be back to the highs of the year. So I've got to be a bit careful, and I might end up adding a hedge again. As much as it pains me to do so, I think this time it would be better to add the hedge. And I was a bit silly, really, because the hedge isn't really there to make money; it's just there to protect. So I really, because I was down all the way down here, I was on right on the weekly pivot. I eventually entered again, and it shot up. And as I say, I took profit way early, and it's kept on going. But I really, should have just put, just trailed stops rather than closing, because the hedge does really need a slightly different different treatment than a normal trade. So I might have to add again, and there's every chance that that's going to happen. The difficulty for me certainly is that that FOMC meeting. Do people buy into it at this stage? And if they do, then I'm going to have to buy along with them.
We shall see with that one, I suppose. It's really hard to gauge, and where we were last week. We were being bombarded by people who had the Fed cutting for sure, and now we're well, I don't suppose we're bombarded, but we're certainly getting the other side of the story now from the punters who are considering that no, and pretty much along the lines that you're talking, that no, we're not going to go. And I whilst have no credentials in saying whether they will or they won't, I suspect that they wouldn't anyway. Whether they do or not is another story. We shall see.
Yeah, we've got a long day ahead of us before that happens. This is the thing.
Yeah,
it's like
there's a bit more going on before that, of course. A couple of CPI announcements. Pound in particular, I suppose, showed a little bit of I'd say gusto, really. You would have thought that there would be a reaction off whatever Mario said, and really there wasn't so much. And the pound has rallied, albeit minimally, but it has rallied and has closed above its high yesterday.
Did you read what Carney said?
No.
Okay, because I didn't get into that either.
That may. I think that probably coincides with where the pound did rally. I haven't looked at that timing, but it looks to me very much like it may be the case.
Let's have a quick look.
And when I say rallied, I mean it hasn't gone a long way, but 40 odd pips. It's the best it's done for a long, long time.
Yeah. I want to pay homage to President Mario Draghi's extraordinary leadership of the ECB. Economic performance. The global financial crisis divides the past 20 years. And this is I mean, I'll get to this as well. And the music stopped. The consequences of the real economy were dire. That's all past. Divine coincidence. I don't think developing in response to challenging post-crisis environment, the conduct of monetary policy has made important advances. So, forward guidance, okay. Now provides more detailed information. Last year, MPC introduced layered communication. The biggest innovation of communication is communication. Oh, it's really all about, it looks like it's about the ECB, actually, rather than the Bank of England. So he didn't say anything, really. He's just talking about the process of forward guidance more than anything else. Yeah, so let's see what happens. The other thing I was going to say is that everybody's kind of like really confident now that the likes of the ECB and the Fed and possibly even the Bank of England, I'm not sure, are out there, and they will they will add monetary stimulus as things go on to promote the global, well, really the stock market, you know, to continue the stock market rally. But we've still got a weakening global outlook, and the difficulty up here is that you know, when you get these rallies, then they really can turn around. Not that quickly, to be fair. You know, there's got to be something significant, but where Donald Trump's concerned, those significant factors can happen fairly quickly.
Yeah.
You know, we've kind of got the we've still got the weakening global economy. We've still got this trade war potential going on, and it might be by the end of the month, you know, we get to that G20 meeting, and Donald Trump and Xi Jinping don't do a deal, and that is obviously going to be negative. So you know, really back to the kind of like the hedging scenario, it's going to be sensible to try and get a hedge on, I think. But when it comes down to it, I'm still not willing to close those shorts, because there's still a chance that we can actually still crash to the downside because of everything that is out there. So what I'd like to do is get the hedge on and just relax a little bit and see if I can get a hedge which will go in my favour, and then, you know, get those stops to break even and just leave things alone at that point.
As you say, that can put you in a relaxed position. You won't have to worry too much about anything if that's the case. Whereas now, you're still asking yourself the question, well, what is the driver? What now? You know, what next?
Yeah.
So,
Yeah, absolutely. Absolutely. And will people really speculate and take us out through the highs, speculating on a potential rate cut when there's not really too much evidence that that's going to happen?
The Fed cut, you mean?
Yes.
Yep. Yeah. No, I'm well. As we know, it's in hands other than ours, but yeah, it doesn't look likely to me at this stage. That is true, mate. There's something happening that is kind of shocking me, but I guess it has to happen eventually, that we get a bit of a rally in the Aussie. But gee whiz, I'm starting to see a strong potential here for a head and shoulders on all the intraday charts. They're really telling me something that I
Oh, really?
wasn't really expecting to see. Yeah. Look, there's a very clear head and shoulders sitting there. There's even the 30-minute chart, you can see it on, and the 4-hour chart, you can see it on as well. And I just don't know how I'm going to trade this long. I guess that's the only way, is to wait and play the technicals. If this does break the neckline, then I suppose it's got to go. Where do we look for a long here? If we're really thinking long, we've got to think about daily pivot now, I suppose. That's pretty much where the shoulder is.
It's a difficult one, isn't it, mate? Because, you know, when this comes down to it, I just had a quick peek of gold as well, and while things are at a dangerous, because this is a really dangerous area for a lot of these charts if you're on the wrong side of it, really. Gold is at a high. I'm not saying it's at the high, but it's at a high. So does that mean that weakens? The FTSE 100 is at a high. The S&P's at a high. It looks like the Aussies at a low. The pounds at a low. The euros at a low. You know, these are swing areas, potential swing areas. So with all that kind of stuff going on, what's going to be the plan here? Because it's suggesting a rate cut, isn't it? You know, if these charts are kind of at these areas where there is a potential swing, then that is saying that the market is pricing in a potential rate cut with gold where it is. And if that rate cut doesn't come, then things like gold and the Aussie and the euro and the pound potentially, I mean, I suppose more gold than the FTSE could really tank here. Without a blink, and that's the problem that I've got, really. You know, sort of like the last thing I really want to do is taking a hedge. If I can help, not doing it, I'd much prefer people to start kind of showing their hand on the sell side, selling off some gold, selling off some stocks, maybe even buying the Aussie and the euro into the announcement, just so it's got some room to come back to these lows without breaking down.
Well, had you asked me, 3 weeks ago what was going to happen, I would have said that, well, the market's telling me that there's going to be an interest rate cut because there's the Aussie right there,
Yeah.
In the lead up to that. But then suddenly last week that started to turn around, and we then got a forecast of no rate cut. And here's what happened. The dollar strengthened, strongly again, and even wiped out the lead up to that, which was interest rate cut, no interest rate cut. It's pretty clear on the chart, certainly the Aussie, as to what's happened there. If you look at the euro, we'll have to go back a bit wider than that. Ready, set, go. Look at the euro. It's the same story. Leading up, we're going into an interest rate cut here on the rally. But as soon as we find out something different, then we come back down.
Yeah.
So that's the same. The only one, I suppose, that, although in some regards it did, you can see that the pound rallied into that as well. Again, soon as it changes, down we go again. So the market really isn't telling me now, if I look at it in that vein, that there is going to be an interest rate cut. But I take your point, absolutely take your point. Something's going to give. My mindset is that they're all going to go at once, based on something.
Yes.
So if you are on the wrong side of these, you could be in a fair bit of strife if you don't watch your risk profile and spread that risk around a little bit. This could be, and on the other hand, of course, could be absolutely superb if you get it right. So it is a very interesting position, and I'm not sure that is my favourite way to play this at the moment, but we'll have a look. And if we find something, obviously we'll trade it. I think the breakout trade's probably a decent one if we can set that up. If that maintains its current position, I think I'll be happy to place that. And I might look outside the pound as well. Because
so can we talk about that a little bit then? What would be the plan with that? What would you need to see?
Okay. Well, let's start with the euro. And let's get rid of a few of these lines. We don't need them.
This is where you really need a pen, isn't it? So you can draw a little.
It is,
pattern.
yeah, absolutely. So here's how I play it, and it's always on the 4-hour chart. And what I look for is the range of the previous 3 days. So in other words, this week's trading. So Monday, Tuesday, and Wednesday. So you actually can't place this trade unless you are in front of the charts at FOMC time. And what you need to do is find the range, but this range just picks itself, because we've got the weekly pivot sitting here, we've got the monthly pivot sitting here. If price is in the middle of this come FOMC statement, it's just a no-brainer. You put your entry long here, and you put your entry short here, and that's exactly what I will do.
Right.
So I really don't need to find the range. The range is self-explanatory. But here's how I would play it normally. So I'd find what I call the real range, or the effective range, which would be the close of those candles of the highs and the close of the lows. And then I would go 15 pips either side of that. So I'd go entry short, 15 pips below here. Let me put that in. So if the entry per se was at 111.86, I'd go to 71. So my entry would become that level there. Okay, I should have given that the right number, shouldn't I? I'll do that.
Yeah, do that. I've got a question after you've done all this.
Yep. Okay. And the long would be 15 pips above that level. So it would be 112.37 plus 15, say 52. which is bang on almost the monthly pivot, the weekly pivot rather. So when I look at that, I think, yeah, that looks okay, but it doesn't make any sense to have this stop loss bang on the weekly pivot, and it doesn't have any sense to make this any sense to make the stop loss pretty close to the monthly pivot either. So I would
Stoller, you mean entry?
Yeah, well,
Yep.
both. The entry is the stop loss, and the entry is the stop loss.
I see.
And I'll explain that a little bit better for those of you who don't understand. So what I would then do is take, because this is so obvious to me that we've got a level here on the weekly pivot, which is 112.51, say, then I would move my entry to 112.65, getting it as far away from the weekly pivot as I can. And the reason for that is because it is a natural resistance level. What did I say? The level was 65, yeah. And, you know, there's going to be liquidity here for sure. There's going to be both stops and buy orders there. So that if it gets beyond that point to around about where we are, maybe 5 pips lower than where we are, it should just skyrocket through there, and same below here. But they are natural levels of support and resistance. So I would like to get clear of them. So the monthly pivot level is 111.79. I'd go 111.64. So we'll move that to 111.64. Which is close enough there for now. So that would be the trade. The caveat to that, well, two really. Price has to stay in this range, or at least come back into the range if it goes out of the range before the FOMC statement. And if it goes outside the range, it can't take out the entry levels. Okay. I would ideally like to see price in or around the daily pivot when the FOMC statement is made. The best case scenario is dead set in the middle of it, of course. So the range that we've got is, I think, about 75 pips or something like that. Oh, shit, no, it's out to 100. Okay. So we've got 100 pips there. That's still okay. I'd like to see 50 gives us about, say, 112.15. So that's where I would like to see price action just before the FOMC statement. If that were the case, then I'd place the order. And this is a buy order, long, obviously, at that level, with the stop loss at that level. And this is also a sell order with a stop loss at that level. And as soon as one of those is triggered, I'd cancel the other. So if you get taken in long, you've got to cancel the short. If you get taken in short, you've got to cancel the long.
So you do that manually?
I can actually set that to happen,
yeah,
on the EA, but I wouldn't, as I said, unless I'm in front of the charts at the time, there's no way I'll place that trade, because anything can happen very quickly either side of the FOMC announcement, obviously.
Yeah.
So I've got to have price in this vicinity here. You know, 10, 15 pips either side of here is just fine. So the daily pivot in DR1 probably is round about where I'd like to see price when the statement comes out.
And would you be looking for anything significant in the way of profits, or would you be looking to scale out?
First level is generally a 1-to-1 level, but I'd also use my common sense. And if you have a look at this chart, it's pretty obvious where you would take profit, in my opinion. You'd either take profit there if you're going long, or if you're going short, you'd take profit there.
Okay, cool. Yeah.
Now, that's not far, unfortunately. But here's the thing. If price is in this area when the statement's made, the chances of you being slipped once you get down to here are very slim. So you're going to get generally a good fill at these levels, rather than if you tried to place your entry here and the FOMC statement comes out, you're likely to get slipped probably down to this area anyway. But having your entries here far enough away from the center, you're generally going to get filled at pretty much the right price, so you're not going to get slipped. This, however, is pretty close. It's only about 30 odd pips by the look of it. Yeah. So taking a profit there, it's going to reduce your risk, but it's also going to reduce your potential reward, obviously. It's an obvious place, however, just to scale out of something. And I think that's probably a wise move. But that said, if the FOMC statement is enough to drive price down that far, then it's probably going to go through that support level anyway. And generally, the FOMC statement will be a bit of a trendsetter for the next, few days. So it's worth hanging on to those positions.
Oh, that's interesting. So, yeah, I mean, I think that's a really valid point. When we kind of look at when we look at the Forex Factory, we've got FOMC statement, and I mean, what I was going to ask you is, does this FOMC statement have a slightly different bearing for you, or is it, would you treat it the same?
Yeah, just treat it the same.
Treat it the same.
Yeah, as I say, what generally is the case, if the statement is absolutely on par with what we're expecting, then probably nothing's going to happen.
Yeah.
And we may not even be taken into a trade, and that's fine. That's perfectly fine. But if it is disparate from what we're expecting, then this will go a long way. It'll go a long way quickly, but the better side of that is, as I've just said, it not only will go a long way quickly, it will remain that way. That will be now the bias of the market, or the sentiment of the market, for the next few days. That's how I've generally found it.
Yeah.
So your 100 pip risk can sometimes turn into 400 or 500 pips in not too long a fashion. Now,
right.
That said, I guess we're going to take into consideration ATRs and all the rest of it, because everything's compressed a little bit. I'd be looking definitely to take a good chunk off after maybe 1.5, 2 to 1, I think. Pardon me.
Bless you, mate.
Oh, got me. What if it is?
Okay, so that's good. Now let's have a quick look as well then at what that would suggest then. So we've got FOMC, and this is the thing, that the funds rate is one thing, but the statement is a whole nother matter, isn't it? If Jerome Powell comes out and says, I suppose anything arbitrary, maybe the market initially reacts and then all of a sudden just stabilizes, possibly leading into the G20 meeting. Or if he says something significant, if he actually comes out and states that he's just happy with the way things are, then I suppose that the question to pose is it all about the number, or is it really all about the statement? And oftentimes it's more about the statement, isn't it?
It depends on the number. If the number is stay as is, then the statement is way more important. But if the number is a cut, then the statement probably is just backing that up.
Yeah.
So if the number's the same, the statement is big time. Absolutely.
Okay, so we are looking at that as a potential driver today, obviously, and the FTSE 100, it's just weakened a shade in the opening gambit of this morning. It might have just kind of got into a little area where traders may be interested in picking it up again. I'd love to see a drift to the downside here. It'd be so much handier for me. But let's see what goes on with that. And then I was just looking at further ahead. Then tomorrow we have monetary policy summary and the official bank rate from the United Kingdom. And then Mark Carney speaking at 9. Again, could be interesting for certainly my trades. And then on Friday, then we get the German manufacturing and German flash PMI. And where this now becomes fascinating is that good numbers can be bad for the market, because now Mario Draghi is effectively saying, if we don't get towards where we need to get to, then stimulus will come. What the market wants is a jolt. Now, I don't think I can go back to 2009 on these data points, but I can tell you, actually, I probably could on one program. Let me just quickly show you something.
Mm-hmm.
Let's bring this over here and just going to have a quick look at the market this morning. Yeah, it's around about 50-50 this morning, so nothing too spectacular. This is the FTSE 100. Now, let's go back to 2009, the global financial crisis. And I can tell you that the reason that we started to rally in 2009 was the announcement of stimulus. Now, if I bring in, now was it Bernanke then? Was it Bernanke? Yes.
In 2009, yes, I think so. Yeah, Bernanke, Yellen, Powell. Yep.
So it was the first QE, and it was quantitative easing. Right, let's have a look. Now, when did he introduce the first QE? Second long-term chairman renominated Obama later returns to his claim. Here we go. So from okay, so under his guidance, the Fed lowered interest rate from 5.25 within less than a year. Yeah, amazing, isn't it? To 0. I mean, that is something. On August 2000,
yeah.
August 25th, 2009, Obama announced he would nominate Bernanke in a second term. Now, when was it? Late 2000s. No.
God,
That's not going to.
We're going to go to 5.25. They said that.
Yeah.
Man,
Yeah. In the jump.
Falling out of their chairs.
Absolutely. Yeah. So that was within less than a year. So effectively, we're looking at sometime around about 2009. And then when we kind of like look back at this chart, 2009 is here. Yeah, 2009. And interesting, this, when the market continued to come down and come down, looking back here, it was still falling at this point. A little bit of stabilization there. But yeah, during the 2008 crisis, so this is when it just started to tank and tank and tank. 2008 from 2007, it tank and tank and tank, and then in 2009, this is when the stimulus package was introduced, and that's what really kind of triggered the long move to the upside in the financial markets. Taking us all the way right up to the 7,000 level in the FTSE 100. Obviously, we've had some turbulent points since then. This was Brexit, and then the market kind of comes up again. It comes down during the talk of. Oh, hold on a minute. Sorry, that was my fault. Let's make sure we got not futures. Not futures. Here we go. There we go. Where's the FTSE 100? I can't find my FTSE 100 here. Indices 100. No. 100. There we go. Right, let's bring this in properly here. Right, here we go. This is when we can see it. Here's the crash. And then in 2009, Ben Bernanke kind of comes out and introduces the stimulus. Now, the market at that point was at 3008. I'll make this a little bit bigger.
Just trying to remember, was that was QE1 there, right?
Yes.
Right.
Yeah, so that was quantitative easing number 1. I think it would have come in sometime around about August, I think. Maybe around this point, maybe before actually. It would interesting to know what happened at the start of April, because I wouldn't be surprised if this was the start of QE, or maybe it was even down here. But that was the lowest point in the market back in 2009, around about March 2009, and then that's the result of it. So we were down at 3005, let's say. We rallied all the way to 5008 at that point, and then in 2016 we start. Sorry, that's 2010. So I'm not sure exactly what happened in 2010. Maybe some jolts again, but then we forward wind to 2016. And there's obviously sort of like turbulent times. So 2016 was Brexit, and this is effectively through Brexit here, June 2016, and then again we start to rally off the back of that. Huge rally actually from Brexit. You know, interestingly, 5008 was the point where we rallied to after the first tranche of QE, and then this is the point that it bounced from. It came all the way down to 5008, and it bounced from that particular point. I could even mark that off.
Who'd have tipped that, eh? Well,
yeah, absolutely. I mean, you know, during Brexit, everybody was kind of panicking, but then everybody recognised that with the pound weakening, the FTSE 100 companies would strengthen and have better profit areas. So we go then to 2018. And I believe 2018 was North Korea, the North Korean crisis. Now, obviously, I'm skipping a whole bunch because I can't remember all the
no.
the fluctuations. But I remember very, very well the start of QE, and I didn't really know what it meant at the time. You know, I just kind of stepped into my I suppose professional trading life, trading full time, but I didn't really know what that meant. Otherwise, I'd have been all over it. And then you know, then we get QE and the market starts to rally. This is North Korea, and then this is where things start to ease off a little bit with North Korea, and then we get trade wars. You know, this is the kind of start of the trade wars, and this is where we've just bounced from again with the trade wars. So if we were to mark off these points, now this is the actual cash. Now, why can't I draw here? I can, but I can't draw what I really need, which is a horizontal line, which is a shame.
You want a vertical line, don't you?
No, I wanted a horizontal line just to kind of go across my chart here, just so we could see where you know what were the significant points that it bounced from. Let's see, we got line. No, I don't think that's going to do it, unfortunately. All I can do is kind of draw my own horizontal level there. But you know, when we kind of look at that again, this was the high of 2007, but this was just before the crash. So it's interesting, you know, how these levels, you know, do become the significant lows, and they almost were the significant highs of before. This again is the point that we got to the 5005 level, which we said was around about 5008. So that was the first tranche of QE. Then we started to weaken, and then again it kind of bounced off that particular point pretty much, and then it comes up and it bounces yet again really off the 2007 highs. So really that goes to show how bullish the market is in many respects. And when we got the lows after the last trade war, where it bounced is quite significant, because the 2007 rally was a significant rally. I mean, I don't think, if we look through this chart, that there's a move quite as as clean. Yeah, I mean, there's just a complete lack of volatility between 2003 and 2009, and stock traders must have just thought, what, no wonder everybody got caught out, because all you had to do was buy every time it kind of comes up. So here's a level of resistance, and you can't quite see it, but it bounces from that level of resistance, goes up. There's a level of resistance, it comes back, bounces perfectly again, almost touches that one, it bounces, touches that one and bounces, touches that one and bounces. So everybody's just kind of like probably, buying it again here. It bounces up again, but then bang, that was your first kind of, that was the first indication that things are weakening. Now, a pattern like this wouldn't be, too nerve-wracking in our kind of environment, because this seems to happen quite a lot. But after such a clean rally to the upside, to get something like that, I think traders must have started to get kind of concerned at that point. And then it comes down, breaks through initially, but then we get a really clean rally to the downside, a clean move to the downside, boom, up to resistance, bang, or up to previous support, I should say, and then bang, and then it actually doesn't come back really to the initial lows here at that point. But pretty clean, isn't it, mate? When you kind of look at it like this, and as I say, this level now becomes a fairly significant point because of the previous significant rally.
And if you were to look at the sentiment cycle, for instance, you're going to see a pretty good imitation of the sentiment cycle right there.
Yeah, absolutely, and also I think if we're looking at this, this was a significant low to a significant high. So this is the primary trend here, and if I put this in with this here, this is the primary trend going up along that level there, along that line there. And when that primary trend broke down, it really did break down with gusto. Now that particular primary trend lasted. In actual fact, it might be better to get this on. Oh no, it doesn't matter. So that primary trend lasted really a matter of 4 years, 4.5 years. But if we're looking at the most recent trend that we've got, I think it starts here. Oops. I think it starts around here.
Yep.
And then it kind of goes up again. Probably you could say that the primary trend was maybe under stress at this point here, but that kind of gives us, and that one was even longer. I mean, that one was 2009 right the way up to 2015. So that was 6 years. Now we've got a new one, and this new one, who knows? Is that saying that the primary trend is over? Quite possibly.
Maybe.
Quite possibly.
Yep.
It's difficult, isn't it? Because obviously, we can draw this from this point as well. And look at it there, which leaves it intact. And maybe that is the line there. But I think there's probably a few. I mean, obviously you can have more than one trend within a trend, but the longer term one is it hasn't really touched this line yet, which that does interest me. I do find it interesting, because really when you're looking for any moves in the market, you're looking for it to test. And has this actually tested this level yet? And it's difficult, isn't it? Because that puts me completely against the grain. It's very, very contrarian to be thinking that we're going to be coming all the way back down here again. But I do think there's a chance. I mean, that's a 1,000 pip drop if that was to happen.
Look, the same could have been said, before FOMC, before GFC, before Brexit. You can say the same. Look, this is never going to turn around. It's just on fire. It's on fire. It's on fire. And then suddenly, out of seemingly nowhere, you get these incredible changes of sentiment, and it just goes. So,
and that's the key, isn't it? I think
thinking it can't happen is a big mistake.
Yeah, yeah, and when you look at the moves here, I mean, it's not a hard and fast rule, but I would say that this move has been this move was a fairly nice angled move to the upside. The move to the downside was fairly parabolic, you know, and the same going up here. It's sort of like fairly gentle, relatively speaking, and then bang, gentle-ish, bang, gentle-ish, and then bang. So you know, I think when they, as you say, when the downside happens, you hardly get a chance to blink, really.
Yep, because everybody gets caught, and if everyone's long, and then the big move comes, tumble, 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 until there's no liquidity left, and yeah, wow, crazy stuff can happen. That first break out of the 2010, what was the longest one there? The longest rally? Yeah, that
This one
first
here.
one.
Oh, this one.
That one. Now,
This.
if you were to put a secondary trend line, gee, I wish I could. When I talk, all I can see is my chart. Of course, I hate that.
Yeah.
If you were to draw a secondary trend line,
Yeah.
from, well, I have to see your chart again.
Oh, hold on a minute, mate. I've got Bossman asking for a chat.
Okay.
I'll hop out and I'll come straight back.
No worries, mate. I'll carry on with what I'm looking at.
Okay.
Righto. Let's take a look. See, guys, we haven't really been around the grounds, so we'll do that. And I've got an interesting thing to ask Ash when we get back, but it's very, very difficult because I can't see his chart. This stupid platform. They'll probably bar me for saying that, but who cares? Okay, let's start with the Aussie. And the Aussie I spoke about, it's really showing me the potential for reversal here, and I just can't believe that can be the case. But all things are possible, and a lot will depend on what the Fed does tonight, of course, or overnight. But really, what I'm seeing here, and this is the 4-hour chart, is a clear left shoulder, a clear head. What we don't have is a clear right shoulder right now. But if we were to get a clear right shoulder here, then two ways to trade this. You could trade it off the daily pivot with a reversal bar, or you could wait for the neckline, which is very clear, to break, or you could trade the break of the neckline if you so wished. But the way I choose to play these, if I don't get a good signal down here, and I'll be looking on a 30-minute time frame as well. If I don't get a good signal down here, I'll be looking for the neckline to break and be retested, then look for the long, because that's where the bigger money is. Well, that's where the safer money is, I'll put it that way, in the second move, not the first. It's also giving me the inclination to move my stops. But where do I move my stops to is the question. If this does reverse, it will go to here, pull back, then it will go to here and pull back, and then it will go to here. So I don't have a safe stop. I don't think it's as safe as I would like it to be where it is. I think probably I'll go with the first move. And as I said, the first move will be the second wave. It should go to here, to the weekly pivot, and maybe this high. So I think that's where I'm going to move my stops to. Maybe just there. 69.29. So I can lock in another 40 pips of profit here. I think I'll do that. It may not be the right move, but I think it's the wise move at this point in time. So I will do exactly that. I can't do it on this chart. It won't drag. No, okay. I'll move that a bit later. That's no drama. But if you're in that trade, suit yourself. But that's that I think is exactly the way I'll play this. So I'm moving my stops to 69.29. on the Aussie. Now, as I say, if this is playable for a long, gee whiz, and we're just talking about this really, where you think, no, there's no possible way this can go long. How can it go long? It's just, the fundamentals are all over the place. There's more rate cuts coming. The news is dreadful. How can you possibly go long? Well, history will tell you that nothing is impossible, and I'll certainly be taking note of that. That's a fact. So let me investigate the smaller timeframes just a little bit and see what is possible here. Well, this line's been just hacked about, and I don't trust it anymore. I don't think it's a good trend line anymore because it's just been violated too many times. In fact, I don't think there is a decent one now that gives me more than the most recent high. So just about there. Interestingly, if you have a look at this, you're probably thinking there's a left shoulder here, there's a head there, there's a potential right shoulder here, and that's exactly the case. I'd be going with the longer the stronger though, and I see the daily pivot as an absolute belter of a trade if we can get it today. So this line may be important to us. If we can get a break here, maybe find a resistance level such as DR1 and there maybe, or maybe even just there, somewhere in here. If it finds resistance in here, consolidates, then slips back below the trend line and then retests it from below, I'll be looking to trade it, taking profit at the daily pivot. That's for sure. And it's there that I'll start to concentrate and start looking for this potential formation of the right shoulder and then perhaps a long. Wow, I can't believe I'm saying it, but there you go. It does look to be on the cards. I'll put it that way. It's certainly nothing for sure, but it does look potential. Now, the euro, we've spoken about the breakout trade, but what about in the meantime? Well, it being another Draghi speech coming up, it being FOMC Eve, for want of a better word, I don't know that I really want to be trading this cross. I don't know that we're going to get logical, if I can put it that way, price. I think that we're subject to what the market thinks Draghi is going to say again, or perhaps what the FOMC statement is going to be. So I don't think we're going to get a clear picture here. And for that reason, I don't think I want to trade euro US dollar until that announcement comes out. If I did have a bias, well, I do have a bias, always got one, I'd still be thinking that we're going to the weekly pivot where we haven't been yet. We've tried, and I was really hanging on this yesterday so I could actually play the short that Draghi did provide at the end of the day. The fact that we haven't been through the monthly pivot is I think significant, and you can see that we've got a double bottom there, and albeit not my favourite high or low, it is certainly that. Trading it up to here is too tight. There's no profit available to the resistance level, so I won't be trading that. But should we break this trade line and come back and retest it and the daily pivot, maybe at a confluence area here, then definitely there's a trade up to the weekly pivot. So that's kind of in my mind. Don't want to go short here. I'm not trading into the monthly pivot, no way. So that's the only trade I think that I would consider. Well, it's not the only position I'd trade it from, but the only direction I'd be considering would be long. And we could also play it. In fact, many cases it'd be better if we played it off the support area. So break here, again, find the bottom, consolidate, get back above here, retest it, and then go. Being careful to take profit before you hit the daily pivot because of, as is often the case, when we do hit the daily pivot for the first time, we go in the opposite direction, and that could well be back to the monthly pivot. So very careful there if you are considering doing such a thing. Now, Kiwi CAD, I was dead set waiting and kind of stalking a short here yesterday, when, and as anticipated, the price of oil rallied. Let's take a quick look at that. That was the oil yesterday, rallying and rallying very well. And my consideration was that the Kiwi had already rallied to a certain degree throughout the day. Yesterday, as you can see, was already on the Rantan. But then, for whatever reason, I don't really know what the reason was behind that, but we certainly got a rally in commodities and the commodity currencies at this stage yesterday. Again, I really don't know what that was about. Perhaps Iran oil took the commodity currencies with them. Perhaps that had something to do with, I don't know, Hash was all over that. We'll ask him when he comes back. But certainly the commodity currencies, the Aussie, the Kiwi, the CAD, all pretty much rallied at the same time. So that kind of threw me into a world of, well, guess what happens next? I had no idea, frankly, but what I was waiting on was a resistance level to be rejected. We really saw that on the 4-hour chart with this bar. But had you traded that, you would have been in all sorts of trouble unless you had a really wide stop. And then that candle became untradeable. And since we've gone into consolidation, and now it becomes a real guessing game as to whether the weekly pivot's going to hold. So the only way I can play that is to allow the weekly pivot to break. And again, similar to what I've just described on the the Aussie, maybe, I can't remember which cross I was talking about. If we find resistance, then get back under here and retest the confluence area, that would be my trigger to go short. But as you can see, currently we're just pinging off the weekly pivot and the daily pivot, and that's where we seem to be happy on Kiwi CAD at the moment. Yeah, you know, my philosophy and reason for wanting to trade this is that the CAD has just had really good news in the last month, whereas the Kiwi not so much, and we're expecting further further rate cuts on the Kiwi. So I don't see how, and again, anything can happen, but I don't see that the Kiwi can match the CAD in terms of what's happening in fundamentals. So I'm really waiting for this to go, and that would be probably the first option that I have, certainly on a 4-hour chart. If I were to take on the smaller time frames, as I'm loath to do here, maybe if we broke to the high side, consolidated, then smash through all of these resistance trend line, support trend line, daily pivot, and then retested them from below, then I would trade it short. So only two real possibilities: allow that to break and retest, or get above here, then come back, and away we go that way. So that's Kiwi CAD. Still keen to trade it, but I need a little bit of help from price, as always. There's nothing new there. Now, I did place a long on this cross this morning, and on the 4-hour chart, I believe, pound Aussie. And my reasoning was this: we had a double bottom here, a higher low here. We've come up, haven't really got to the monthly pivot, and we've come back off it, but then put in this reversal bar. Now, this is not a strategy, or it's not part of my strategy to trade this, but it does look glaringly obvious to me that this is a significant higher low. The only issue I really had with it was the reward in the first take profit wasn't extremely good. It's okay, but it had to get there rather quickly to get that profit. Now we've got a situation where if we were to go now, you know, we're kind of limited to here before we need to take profit, which I will probably do if we indeed get that far. But you know, the setup's there. the fundamentals aren't matching it. Well, again, this pair's pound Aussie. Which one's going to the bottom first? And that's a tough nut to crack, really, at the end of the day. But the structure is there, and so too is the structure on the Aussie, as I pointed out, and so too is the structure on the pound. So we've broken trend line here, come back. We had retested over here. Now we've had a daily pivot test on the pound. Look, it's not the most obvious trade, I'll put it that way. You're not trading a strong currency versus a weak currency. You're trading two weak currencies. In fact, if I have a look at my little FinViz indicator, if I can find FinViz, there it is. I'll drag that across. What's it telling me this week? It's telling me that, I'll just update that to make sure it's current. I don't need the ads. So the pound is still the weakest. The Aussie, this doesn't look good for me. It doesn't look good for the trade, I've got to say. The Aussie has elevated itself, and we're seeing that in the potential inverted head and shoulders, of course, where we really had a stack up of Aussie Kiwi pound, Aussie Kiwi CAD pound over here before that rally overnight. And now things have changed around a fair bit. This is the week now. The day, the daily looks like this, where we've got the Aussie as the weakest. And that's okay, I don't mind that. And we've got the pound up here. So that's looking a bit better for mine. Not much in it, I've got to say, but on today's evidence, the pound is stronger than the Aussie. So that may be worth a bit of a boost to my trade if it does get triggered. Obviously, you can see that the pound is, the yen is the strongest currency. Swissy, not far behind it. We're looking at safe haven currencies here by the look of it. Maybe we're going risk off for the day. It is early days, of course, so not a whole lot can be read into this. And you can see that the movements are very slight at 0.01 and not much greater. But yeah, that kind of fits in with my plan. And if we do get above the weekly pivot, I think we do have a strong chance of getting to at least the trend line and maybe monthly pivot, where I've got my second take profit just under there. If you wanted to follow this trade, then
I'm back.
Cheers, mate. You would perhaps want to follow the trade at 1.8295. That's the entry level. Stop loss is 80 pips. And we've got a TP1 of 57. As I said, I may amend that because when I placed this morning, I had that level there in mind. If we reach this trend line here and look like pausing at that point, I will take the profit early. So just be mindful of that. I won't let this go if we look like pausing at that trend line and don't take that level out. So TP2 is pretty set. I won't change that one. It is at 115 pips, and then just let her rip, baby. Just let her go. I'm hoping that's going to be the case. Pound long again. Ash, not a great idea, I don't think, from a fundamental point of view. But as we've just discussed before you left, anything can happen at any time. So,
So we've got CPIs due in 40 minutes, and we had. Oh, I didn't tell you actually. We had another leadership debate yesterday.
Oh, okay. I knew there was on. Did anything change?
Oh, not really. It seems that Boris Johnson has just kind of increased his stock, and the front runner, he really has started well. Do you know? I think I've told you this story before about the Iron Horse, my favourite horse of all time. I'm not a big horse racing man, but there was a point where a friend of mine and I were getting into a bit of horse racing gambling, and I used to like this horse called the Iron Horse. His name was what was his name? Giant's Causeway was his name. Right. And they called him the Iron Horse. And the reason they called him the Iron Horse is that he would get out in front And any time that any horse came alongside him, he would just put his foot to the floor and he'd win. And I think he won. You know, I don't know what the record was, but it's something stupid like 13 Group 1 wins. And he was going to break the record. I think he was equal with another horse, but he was going to break the record with another horse. And the end of the story is that. It may well have been Frankie Dettori on this horse called Calanese. It might have been Richard O'Brien or one of those guys. I'm not sure, but oh no, I tell you what, it wasn't those. I can't remember the guy's name now. Kieran Fallon, I think. Kieran Fallon was on this horse called Calanese, and everybody knew that the Iron Horse was going for the win and to break the record. And he went off just as normal, and he went along the rails. He always sticks to the rails. And what Calanese did, which was very, very clever, was he moved to the other rail. So the Iron Horse, Giant's Causeway, couldn't see him.
Yeah, he wasn't beside him, yeah.
Yeah, he wasn't beside him, and Calanese ended up beating him, so he didn't win. He was second the Giants Causeway, but Calanese ended up beating him in this final Group 1 win, and it was his retirement race as well. So he retired on a second, if you like, or a loss. And it's a bit like Boris Johnson right now. If somebody can't work out how to get to the rail, then he is going to continue to fight these guys off, because the only thing that he really had going against him in some respects was a hard Brexit. But as some of the other candidates kind of came out and said that the hard Brexit would be so catastrophic for the UK, then the Boris Johnson's kind of changed his rhetoric a little bit and almost kind of calmed it down, as if to say, I wouldn't want a hard Brexit either. So he's currently seeing them coming alongside him and pulling away still. So there needs to be sort of somebody that can do that. But the problem that the other candidates have got is that none of them have really got a established stock, and the ones that do are really nowhere near him. If anything, they're falling further behind. The one guy that is maybe coming alongside the other pack from nowhere is this guy called Rory Stewart. And Rory Stewart still advocates Theresa May's deal, and he still wants to kind of go in and renegotiate with the EU. But the one thing about him is he's very honest, you know, almost to his fault, actually, where he's saying that anybody that says we're going to leave on the 31st of October is, you know, they got their head in the clouds. There's no way that that's going to be renegotiated, and there's no way that these people say that they're going to deliver this, that, and the other are telling you the truth. I am telling the truth, and I think he is, you know. And his demeanor on this show last night was notable, where the others were all heads up and almost looking at Boris Johnson as the king in waiting, if you like, the prime minister in waiting, and touting in a way for a job, you know, making sure they keep him on side so they can stay within cabinet. Rory Stewart's head was down. And while he was talking and many others, his head was down, almost as if to say, you're lying. You're just lying, and I can't look at you while you are spouting this rubbish. Because Boris Johnson's brilliant at avoiding, you know, we know politicians avoid questions, but the way other politicians tend to do it is that they answer something else. The questioner asks something, they answer something else. What Boris Johnson does,
not the questioner's question. Yeah.
Exactly. But what Boris Johnson does is just answer anything he wants. So it'll turn it back to well, as you say, answering his question, but they'll ask him a question in between and challenge his view, and he just ignores it and continues to talk over somebody until they give up. Whereas at least the others, when somebody asks them in between, you know, to clarify a little bit, then they'll maybe repeat what they've said. Boris Johnson just ignores it. You know, he just kind of bulldozes his way through. And that's his strategy. You know, his strategy is just to bulldoze any questioner into submission. It's fascinating. But as I say, Rory Stewart is the only one, but his stock just isn't established enough. So I don't think at this particular stage that anybody's got a chance. It looks like Boris all the way, mate, which is a bit concerning, right? And you're talking about the pound. maybe with Boris easing his rhetoric to a degree on the EU and saying that he will, look for a deal rather than saying we're going to crash out regardless, which is what he was challenged on last night. Then the pound may strengthen off the back of that a little bit. But without that, and that's what we're watching now. Now we're watching Boris. We're not really watching the leadership contest. We're watching Boris. What's he going to say next? Because he could well shape some of the moves in the pound, because he will be leading the negotiation from here on in, and he's not particularly popular. He's so un-PC, if that's the way to put it. He lacks any kind of almost any humility, but any subtlety as well. There was a guy that came on. Oh no, there's a girl that came on yesterday and asked about climate change. And all of them said, look, they're aiming for climate change to the UK to be carbon neutral, zero carbon emissions by 2050. And she said, you can't wait till 2050. This isn't a problem about tomorrow. This is a problem about today, and it's a problem about now. And as she went off air, you heard Boris Johnson saying to the rest of them, "Oh well, chaps, back to the drawing board." And I thought, he's constantly joking. He almost dismissive of somebody's point, that they've got a serious problem with it. He's just like, well, or it's all it's a bit of a joke. It's a bit of a joke. We can't do that. We'll do this anyway, and it's a bit of a joke. And I've known people that have been in a meeting with him, and he's gone out to take a phone call to a Chinese envoy, and he's come in doing an impression of a Chinese person.
Nice.
Yeah, he's got no class in some. He really is Eton bully boy. That's what he is.
I'm wondering
And
you
it's
get away with that these days. That's
well,
pretty racist,
he
Mate,
somehow
just before
does.
You go on, I'm
Yeah.
just going to cancel this pound Aussie order, and I may replace it after the news. So if anybody is in the room and following that, I have cancelled the order till after the news. Yeah. Sorry, mate.
No problem. He also famously said that the Muslims that wear burqas look like letterboxes. Yeah, you see, this is the thing. I think if he was in a group of lads, certain things that you say in a group of lads and a group of mates, if you said them out loud, they would be perceived as being really quite inflammatory and offensive. But you say, there's certain jokes that you make, but with your mates, you don't mean anything, but there's certain jokes you make, and I think that's the thing with Boris Johnson. He doesn't seem to have a filter of the jokes that he would make behind closed doors to the stuff that he would say in the papers.
How intriguing. Mate, I was going to ask you a question, and I can't remember Oh, yeah. Do you know what happened yesterday with the commodity currencies? Everything rallied. Is it just the oil? Oil went at the same time, so I'm assuming. And did something happen? Read the Iran thing, or it's just
no, it wasn't Iran. It was OPEC scheduling the meeting, their next meeting.
Is that all?
Yeah,
and
yeah. So they're kind of they've announced that they're getting around the table again.
Okay, all right.
Yeah.
Well, oil today is thinking about it. It doesn't know what it wants to do at this point.
It is thinking about it, isn't it? Yeah, I see that, mate. I see that. Very interesting indeed. And that 55 level is looking much more likely at this stage than the 45 level. So a break and a retest of 55, and I think oil will look like a buy, in my opinion.
Yeah, nice little double bottom sitting there on the daily chart. Maybe rally to the monthly pivot and a pullback. Yeah, I see where you're coming from. So, yep, I'd agree with that, but need to be patient, I think, before we go there. I'm loath to pull this pound Aussie off, but.
You might want to rephrase that.
Yeah, I'm loath to remove the pound Aussie order.
Yeah.
but I have. I got this sneaking feeling that we're headed straight to monthly pivot on this news announcement, but obviously the other thing is entirely possible as well.
Let's have a look.
That's why I just can't do it. So let me go with that. I'll watch the news come out, and then we're just about done, aren't we?
The news isn't for another half an hour, mate.
Oh, isn't it?
No.
Oh, I thought it was coming up top of the hour.
Hold on. Am I wrong or are you wrong?
I can't remember. I really
It's
can't
usually
remember.
9:30, but maybe I've got my times wrong here. Forex Factory isn't loading for me now. So
9:30, you're right. Yep.
Okay, 9:30. Okay.
There's Euro news out now, but no, the CPI is at 9:30.
Oh, what was the Euro news? Because that's still of interest, I think.
Current account and Italian trade balance.
And positive, negative?
Speculation. They're not out yet. I can't see them anyway. Speculation
Okay.
is for one up, one down.
I see. German PPIs came in month over month negative. So again, I suppose pushing the ECB towards stimulating. Current account is lower as well. Italian trade balance isn't going to be hugely interesting. Yeah, so CPI is currently the FTSE 100 is drifting to the downside. So it looks like we're selling into that CPI figure anyway.
Looking that way, buddy. Yeah, I don't know. I'm not going to put it back on now. I'll wait. Pardon me, until the news announcement. But I've got this. It's almost an image in my head that we're headed straight to the monthly pivot. And
on the pound Aussie.
On pound Aussie, yeah. But yeah, I mean, I'm not a visionary.
Oh, really? Oh, right. Okay. Yeah, yeah.
But that's the vision I've got in my head.
Yeah.
I really don't think I've got anything else that I haven't explained already. Yeah, looking for that daily pivot thing on the Aussie. That could be interesting if we get a daily pivot test, and that's going to form that right shoulder. Kiwi CAD, I'm still keen to trade short, but I don't want to trade it short from here. I've got to get it out of here. But it's right on the precipice. You can just feel it about to crash. I don't want it to crash yet. I want it to rally before, so I can get a decent price. But yeah, we shall see.
Okay, mate.
And that's about all I'm at, mate.
All right, sounds good, mate. Well, one more day tomorrow, same trade time, same trade channel, and we will do it all again. See if we can untangle the FOMC statement after tomorrow. Let's hope it's a hold. What I'd really like is an interest rate rise. That would help me out no end.
Yeah.
But unfortunately, that's not going to happen. But we'll still untangle what they say as well and see where it leaves us for the rest of the month.
I don't really need to repeat that order on the euro. I think that's pretty clear. If you haven't seen it, just watch the replay. It's pretty clear what I'm going to do. If I'm up, if the price moves outside of this range before I go to bed, then I won't. I'll just sleep through the announcement and wake up tomorrow. But if price is in this vicinity, in this little range here, I will look to place that order long and short on the euro and see how we go this time tomorrow.
Great stuff,
right,
mate. All right, dude. Yeah, you too, mate. You too, and everybody else have a good one. We'll see you tomorrow.
Bye, guys.